Hey, it's Clay Trader, and this will be a video chart on ticker symbol DRYS. We will take a look at the 30-minute time frame. Real quick, what do I mean by 30-minute in case maybe you're new to charts? Instead of each one of these candlesticks here representing 1 day's worth of price action, which is what you would normally see, each one represents 30 minutes. So while this here may look like several weeks worth of time, it's actually just the past several days broken down into 30-minute time slices. I like to do this time frame. I think that's a good job of telling the quote-unquote story of the price, and then makes mapping out where levels of support and resistance a bit easier to see. Did this analysis on Friday, so that's where the green line annotation right there is coming from, and this is where the big update comes into play. Big update because this will mean a little bit more after I scrunch up the chart, but this green line was representing, where this gap had originally occurred from several weeks ago. So the gap, the price was struggling there, and then the price made the move upwards. So this is what, in kind of trader terminology would be called, the gap close location. And, gap closes in and of itself aren't terrible as long as it bounces from the gap close. The whole problem here becomes, well, and as we'll zoom back in, there was no bounce. It got down to that gap close location, and then the price just kept on sinking downwards and downwards. And as I talked about on Friday, this was not shocking to me. And if you follow, and by no means is that like me trying to make some sort of revolutionary, call, or if you've been watching DRYS for any really extended period of time, then this thing likes to drift downwards, and I'll just leave it at that. So not hugely shocking to see that it's now broken down below that key level of support, which brings about our first update, which states when levels of support are broken and closed above, they tend to act as resistance. So on any sort of bounce upwards, key area of resistance, the key battleground now becomes that $2.20 level. So that'll be, the public enemy number one going into tomorrow and the remainder of the week. In the event the bulls somehow get up above there, which would be quite shocking, but not impossible, the next key level of resistance to keep an eye on is going to be that purple line right there, the 50-period simple moving average. So now what about levels of support? Where are some next potential areas where the price could be headed? And then maybe find some stabilization. For this, once again, going to have to scrunch up the chart here and go way back into the chart's history. Next key area of support right down there. Oh, that makes perfect sense. $1.85, which is where I believe it bounced off of today. Why do I say that makes perfect sense? Well, you go way back into the chart's history, and you can see that there's some points of support right there where the bulls held strong. And once again, bulls holding strong right there. So maybe $1.85 will be some sort of bottom stabilization point. Only one way to find out, and that's just to let time continue to unfold. So bears are back in full control. The easiest way for the bulls to kind of regain a little bit of control, at least, is to not only break up above $2.20, but get some closes up above it. So we'll see what happens with it. First day of the week, still 3 days left. One of the biggest questions I get is, hey Clay, how do you find the stocks that you trade? So what I've done is put together a free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then click on the image that is up on the screen right now, and I will email you the guide. The guide itself is very short and to the point, and best part, it's completely free. Thanks for watching the video. Let me know if you have any questions.